Good morning. Welcome to Market Monday for March 24th, 2025. Last week's sentiment still remained bearish as AAII bulls were below 30% for the second week in a row. Here are all the times that's happened, and here's how it lines up with the S&P 500 stock market. This chart goes back all the way to 1990, so historically speaking, this data point has marked great buying opportunities. Quick check-in on analysts' estimates. Here's the market for the year so far. Here's the lowest estimate, and here's the highest. Up here at 7,100 represents a gain of approximately 25% from current levels. Down here, 5,500 represents a loss of about 3%. Speaking of intra-year drawdowns, here are all the times the S&P 500 stock market did have at least a 10% pullback during the year. In this chart since 1920, 59 times. Of the 59, only 17 went down further than 20%, leaving 42 times that the market decline stalled out between 10 and 20% down. That's the market gyrations during the year. How about what happens at the end of the calendar year? In fact, it rarely finishes the year with a double-digit loss, meaning more than 10% down. Since 1930, only 12 times, 12 years, did the market finish down more than 10%. In almost 100 years. So clearly the odds are in your favor as stock market investors. Our main job being to manage ourselves during these drawdown periods, which admittedly can be a challenge considering the media and headlines that come out right on cue. This guy, Harry Dent, will still be around with the cockroaches if the world comes to an end. Here are times when people hedge their portfolios with options rather than expecting future growth. Here's the fear and greed index. Extreme greed when the line's going up, fear when it's going down, and the S&P 500 down here. This gauge often signaling extreme fear around market bottoms. And lastly, this gem right here. President Trump torching dollars and the economy along with it. Do we tend to see these things at market tops or bottoms? Something else we haven't seen in a while are international stocks outperforming US stocks. Here's the S&P 500 down here and developed international markets here. It's about a 14% spread so far this year, mainly driven by the United States' not so subtle desire to cut spending, whereas Europe is suggesting they are ramping up spending on infrastructure and defense. And today we'll leave you with, got data? Data centers, that is. Here's a look at private construction spending for certain categories over the past 10 years. We've got hospitals, schools and colleges, lodging, shopping centers, and data centers now ramping up to eclipse them all. Have a great week.